The time now is 8:46, and a little over 4 hours from now, the Federal Reserve meets with everyone on Wall Street and beyond, looking to see a hint about what the Fed may do about interest rates. And also what will be watched is the Fed's outlook about the economy will be something they talk about here in maybe about 5-6 hours from now when that meeting concludes. We'll get a preview of this from Christian Clausen from Burns Financial. Good morning to you.
Good morning.
Big day. A lot of people focused on whether interest rates. The anticipation is interest rates will not go down today, but when would they go down?
Yeah, expectation is it's going to stay flat, and this is actually the longest period that it's stayed this flat and actually plateaued. I would say the earliest, most analysts are points towards June, maybe July.
All right, so the real question is, that's one thing. Then the other thing is, people have the Fed governors kind of penciled in, okay, 3 rate hikes, or rate reductions, excuse me, 3 rate cuts this year. They're running out of time. Yeah,
and I think that's still the consensus, what's going to happen. I think if they decide to only do 2, I think people will get a little spooked, the market will get a little spooked, and it could be that, the market today will fluctuate a good bit.
Right now, that's a good point. The market is in neutral. It's down 32 points.
Right.
Just kind of sitting there, not engaging in reverse or forward, waiting to see what happens.
Yeah, it's definitely in like full anticipation.
Inflation has improved. So what's the issue here?
It hasn't improved, fast enough. So the target is 2%, and we're at 3.2, and it's been hovering between 4, and 3%, like for the last 6 months or so. And so, until it starts going under 3, I think Fed is going to keep the interest rates high.
This is like any other subject. If you read enough of it, you'll get all kinds of different points of view. I read a commentary this week from somebody who suggested it, like Bloomberg or the Wall Street Journal, that the Fed really hasn't made that big a difference in their efforts. What's really happened is the supply chain has fixed itself, which if that's really true, then it really gets dicey as to how you proceed.
Yeah, we don't exactly know if
why inflation.
Why inflate. We're just happy that it is coming down because we look at it and it's in June of 2022 it was at a 40-year high, and so it's come down drastically from there.
So in terms of this, finally, how does this affect people?
Well, high interest rates are good for conservative investors. We look at CD rates, we look at just in general conservative investments, interest rates are high. You can get CDs at 5% again. That's been a long time. The opposite is when interest rate goes down, typically that's a really good boost for stock markets. So right now, stay on the conservative side, make a little money there, and then wait, anticipate for the interest rates to come down.
And time it all out. All right, Christian Clausen from Burns Financial. Thanks, Christian.
Thank you.